Good morning, or afternoon, or good evening, depending on whether you're watching a live presentation or the pre-recorded version. In any case, thank you for finding the time to attend this session, and thanks to RIS.net for organizing this event under the circumstances which are all well aware of. I assume the audience will be a mixture of financial crime professionals working for financial institutions and RegTech experts. So in my presentations, I will try to strike the right balance, and I'll try to make this presentation interesting for both sides, so for all audience. So without further ado, let me start by providing you some context about why compliance with the law and regulation is important for the financial institutions and the banks in particular. It is nothing new that failure to comply can have severe consequences. So hefty fines, as we have seen recently, again, spending even more money for remediating the identified issues. Also, the reputational risk dimension is present regardless of the fines and fixing the issues from financial crime perspective, for example. Again, what is important in the UK in particular is the increased personal liability. So, for example, the money laundering reporting officers are held personally liable for managing the financial crime risks for the financial institution. So this is another element, and technically imprisonment is one of the possible outcomes if things go wrong. So this is in short why the compliance is important, but how in practice the challenges are even bigger because of the fast-paced changes in the regulatory landscape and also the fast changes in the technology. So let me give you one example. In the UK, for example, the fourth money laundering directive was implemented on 26th of June 2017, and not long after, the fifth money laundering directive was transposed into law, and in January this year it came into force. While we are discussing these matters, the sixth money laundering directive is supposed to be transposed in the UK law by end of December this year. Regardless of the Brexit, even if this doesn't happen because of the Brexit, the actual obligations posed by the sixth money laundering directive will be still applicable in the UK, maybe not as a law, but because they form part of the good practice in combating financial crime, the real life implication will be pretty much the same. So what this means for the bank or for the financial institution, it means change of the internal processes and practices based, each of these regulatory changes will create a number of internal changes within the bank. So this is where the RegTech can help banks to remain compliant in the fast-paced changes environment. And that's why where the actual partnership, RegTech and banks gains on importance. So this brings me to the first topic that I wanted to discuss about where the AI solutions are most helpful in solving regulatory compliance, in particular financial crime, which is my role in Santander, as you have seen by the provided biography. So where the AI solution and machine learning are most helpful for addressing banks' regulatory compliance obligations. So in my mind, the most important elements are simplification and increased efficiency for the bank. So both of these ultimately translate to increased cost to income ratio. So how can that be actually achieved in practice? That's one of the key questions. So I think talking about simplification and increased efficiency is nothing new, but how, let's say, a UK retail bank can translate that into the daily practices. I think that there are three key points where the AI solution or machine learning solution can come into the equation for addressing the compliance issues. Automation of the repetitive manual tasks is the one key area where the AI solution can be very helpful. So let's say number of processes in the banks will depend on the data quality. I would like to use the example of the customer screening and payment screening. So each bank will need to comply with the number of sanctions regimes. So in the UK, that's UK, EU, and UN, including the US OFAC sanctions. That means screening all of your customers, screening all of your payments. How is that done in practice? In one side, you have your customer database. So this data feeds into the screening system. On the other hand, you have the screening lists. So you have the applicable lists, name, surname, date of birth, and the other data points of the subject sanction being subject to sanctions targets, or politically exposed persons, or adverse media is another example. But in a nutshell, it means comparing your customer database against the lists provided by different regulators. If the data quality of your bank is not where it should be, or the lists are not good enough from the data quality perspective, so let's say you have name and surname but not date of birth, then the bank will end up with a large number of false positives, which is the name of the alerts being generated on the basis of the listed person against your customer, but it doesn't mean necessary that it's your customer in question. But how do you find that out? You can have a team of analysts going manually through these alerts, comparing the data points of your customer database against the list. Manual processes, you can see, labor intensive, and this is where one of the areas where RegTech can help with introducing AI solution in order to reduce the false positives and increase the efficiencies. Another second point that I wanted to highlight, in addition to the automation of the repetitive manual tasks, so removing the manual repetitive tasks from the analysts' teams and replacing where possible with AI solution, the second point is the efficient decision making. I would like to use an example from transaction monitoring perspective for this particular point of efficient decision making. So the banks also need to comply by submitting formally suspicious activity report if the bank notices unusual transaction. How is that done? In practice is there are traditional transaction monitoring systems, and alert is created where transaction is considered to be unusual. And again, similar to the customer screening and payment screening processes, it's a labor intensive and manual, which means you have analysts to sit down and compare the alerted transaction against the past transactions for that particular customer, and making that decision based on the behavior, whether the transaction is suspicious or not. So introducing a machine learning solution by using the previous sequences of events to predict the future behaviors is something that can significantly cut the time spent on analyzing the particular alerted transaction. So instead of human being comparing hundreds of, sometimes even thousands of transactions in the last 6 months or the last 12 months against a particular one, you have a machine learning solution which will give you the answer immediately, but also you have a model that you can train to prevent re-alerting of a similar transaction in the future. So this is an area which is probably one of the keys where the RegTech can focus in order to help banks with achieving compliance from transaction monitoring perspective. And the last point is the simplification of the onboarding process. It is a good example. So these days, the financial institutions are moving towards digitalization. So using digital identity, using electronic ID and V, and so on. It seems that the fintechs are step ahead probably in that respect, or they were step ahead by using electronic ID&V at the same time in order to comply with the impersonation requirements, that they will require the customer to provide a selfie or short clip so they can compare against the electronic ID&V achieving compliance. But now with the COVID, I think the traditional banks, the COVID was actually the catalyst prompting traditional banks towards these solutions. And I think this is the area where fintechs and traditional banks are now pretty much aligned. So it is important from two perspectives. So two perspectives, not only from the angle of the compliance with the financial crime, but also for improved customer journey. So these days, we are expecting different level of service than that was the case before. So it is not only the millennials, it is everyone really. One example, if we want a bank account, we want it here and now. We don't want to queue up in the branch and wait for a few days for the account to be generated so we can use it. We want it now. So this is where the AI solution came to help banks improving both their customer journeys and compliance with the financial crime perspective. So I think in summary, these three aspects can be summarized as automation of the onboarding process and automation of the ongoing monitoring. So remember reducing the false positives in customer screening, payment screening, and transaction monitoring that I was talking about, and smarter decision in order to reduce both false positives, but also the human error, because more human interaction, more human errors are to be expected, and that's clear. So I guess right now we know what are the areas that can benefit banks from implementing artificial intelligence or machine learning solution. But the key question for the RegTech provider is to explain the bank what is the tangible benefit for the bank deriving from investing in artificial intelligence, and second, how long it will take for the changes to give the desired results, because the bank is driven, they are their financial drivers. So return on investment ratio is very important. So if I'm the bank, if I'm paying for artificial intelligence solution, I would like to know what is the benefit and what is my return. So let's say hypothetically 3 to 5% improvement of efficiency is probably not that attractive. But if I can see significant benefits coming back fairly soon, then it is a different story, and the bank will be more prone to invest into artificial intelligence solution. And this brings me nicely to the second point that I wanted to cover today about the barriers and obstacles of using artificial intelligence and machine learning. But even more important, how to overcome these challenges. So what are actually the obstacles preventing the financial institution or the bank in particular to adopt AI in the areas where they can, something that I mentioned before: customer screening, payment screening, transaction monitoring, onboarding, and so on. So I think it is very important for the RegTechs and the banks to understand each other's perspective. So I mentioned before, the RegTech will need to explain the bank what are the benefits. And I'm fully aware that quantification is not always possible, but getting to that level where clear explanation can be provided, how the bank will benefit, when the bank will benefit from implementing the particular solution, is the step forward from the RegTech provider perspective. Another thing that they will need to explain to the bank is how the actual solution works in practice, there is a requirement for the bank to demonstrate to the regulator in the UK, to the FCA, for example, how they comply with the law and the regulation. So I'm not talking about bank staff getting some expertise in, I don't know, how the algorithms work in practice, but they should have some high level of understanding and being able to explain to the regulator about the particular solution and why they think that solution is compliant from financial crime perspective, let's say. So glass box rather than black box solution, that is very important. But let's go to the obstacles. Interesting article by Forbes. They refer to key 4 obstacles to the adoption of the artificial intelligence. This is in general, it is not just financial crime. It is in general artificial intelligence solutions. The first one, they talk about cultural barriers. So the human nature and the inherent resistance to change, that's the first one. The second is fear. Another human characteristic, handing over the control to machines and losing control. Many people don't like that. The third one is the shortage of talent. So although the AI research has been around for a long time, decades now, it seems that there's still a shortage of data and technology professionals. So I'm not talking about the RegTech, I'm talking generally. I'm talking here about banks, what I mentioned before. You need the right people with the adequate knowledge in all areas. And the fourth one, the Forbes referred to, is the lack of strategic approach to AI adoption. And this is perhaps an amalgamation of several other barriers. So like a lack of talent, lack of management buy-in, and the culture, which results in lack of strategic investment in AI. So that's why we probably see more often than not sporadic investments in artificial intelligence solutions. I think I tend to agree with these findings, actually. I think that they are fairly accurate. What I would say, I would just add a few things. I think in addition to that, from what I'm seeing, working for banks for a quite long time now, I think the real challenges in real life for the bank is the data quality. So how good the bank's data quality is. So how good the data is. That's one of the key questions. So if the data quality is not at the expected level, investing in sophisticated AI solution is not always the way forward. So one may argue maybe that on the contrary, investing in AI will resolve the issue. But if your data is not good enough, and if the only solution for the bank or financial institution is to reach out to the customer in order to plug the gaps in the KYC of that particular customer, that it means that bank will need first to address the data quality and then maybe move towards AI solutions, which will will enhance the data further and will help with the other processes that I mentioned before, like customer screening, payment screening, transaction monitoring, customer risk assessment, and so on. I think another challenge for the banks is the complexities. I touched on this before. So how the bank can explain to the regulator why they think the AI solution is fit for purpose, really. So that's one aspect. And the other aspect of the complexity is how the bank can justify the cost to benefit ratio. So for the money that I spent on the AI solution, what do I see in return? So it is as simple as defining the desirable outcomes and measurable benefits. Another challenge is the governance aspects. So making sure that the right governance and controls are in place when implementing AI solution. I think GDPR is a very good example for this. In the GDPR requires for the data controller. So in this case, if I take the customer screening process as an example again, if I screen my customers as a bank, I'm the data controller. So according to the GDPR, it is actually my call to decide what information I will use and what are the lawful basis for doing so. At the same time, I can outsource. I can leave the screening, for example, to a third party, and this third party becomes my data processor. That is all good in theory, but the GDPR actually will hold the data controller liable for the data processing of the data processor of the third party. So that means the data controller may be held liable for third-party data breaches. So therefore, the firm must be confident that the third party takes data protection seriously and that they will have appropriate controls and measures to meet the regulation requirements. It is very important. GDPR stipulates the fines of up to 10 million euros or 2% of the turnover. So imagine if something goes wrong for Amazon, what is the turnover? There were fines actually in the UK for the GDPR breaches. So the first targeted were BA and Marriott hotels, both combined being fined around 300 million British pounds. So that's actually points to the significance of how important it is to comply not only with financial crime obligations, but the GDPR, and the bank will face these issues on a daily basis. It is not just one segment. It is not just financial crime. You have financial crime obligations, you have GDPR, you have fraud, you have a number of other compliance related obligations. So how we can bring the financial institutions and banks and the RegTech firms closer? I mentioned the better understanding of each other's perspectives and finding the common ground. That's very important. And this is where probably more work needs to be done, so each of the parties can understand much better the other's perspective. So if I'm a RegTech, I'll need to understand what is driving the bank's decision for investing in artificial intelligence and machine learning. So the bank will look from the perspective of return on investment ratio. So what I'm paying, what I'm seeing in return, what are my benefits, and how much I can save from that. And equally, the bank will need to understand the RegTech perspective. So it is good to know exactly what are the benefits, but realistically, not always everything can be quantified. But in principle, this is the better understanding of each other perspective is the key. And this will it will become even more important for going forward with the fast-paced changes in the regulatory landscape, fast-paced changes in technology. So it is becoming even more important, but it is a two-way street, understanding each other. I mentioned about the going forward and the changes in the regulatory landscape, but also the technology. So this is where the future focus should be. So the banks will need to keep pace with the evolving regulatory landscape, but also the changing technologies by implementing AI and machine learning solutions. For example, digitalization is moving faster than ever, bringing many conveniences, but there are risks too. For example, the identity theft is seeing upwards trends. Same for the data breaches. So I mentioned the GDPR fines. Cyber attacks, another thing. So cyber attacks are becoming more and more sophisticated with severe consequences, both from losing money because of the particular attack and fixing the issues after, but also the reputational risk dimension. is very important. And clearly, this is where artificial intelligence solution can help in detecting potential threats in advance and providing a better defense really before the attack happens. So clearly there is a benefit of building on the traditional cyber crime protection systems with artificial intelligence solutions. Important to mention here is that the technology is not only available to the RegTechs, it is also available to criminals. So that's why the cyber crimes attacks is a good example, that they are becoming more sophisticated. So the artificial intelligence solutions allow cyber criminals to concert their attacks and to enhance actually their attacks and then cause more damage than ever. Another important element that actually an example that I wanted to use about fast changing technology is the crypto assets. So this is a very good example about how the focus is shifting towards new technologies. So crypto assets is now a big challenge for a number of banks in the UK, because tackling new threats with legacy systems is something which is bordering impossible. So this is where the banks are focusing now, spending a lot of money about how we can tackle crypto assets. Crypto assets are now subject to FCA regulation that should help to a certain extent by placing the burden on the exchanges, for example. But again, it doesn't remove the bank's responsibility to comply with the obligations. So this is an evolving area and something to be aware of. So I would like to wrap up here probably by saying that the regulatory landscape is the subject of extremely fast-paced changes, which in turn means that the banks will face A, increased compliance investment, and B, even with that, there is no guarantee that obligations will be met. So fines can still be imposed by the regulator, and we have seen the trend of heftier and heftier fines. So let me give you some statistics here before I finish very quickly. Boston Consulting Group, they say the compliance and financial crime personnel today account for about 3% of the average bank's headcount in the US and Europe. So that's more than double the level in 2013, for example. Or Danske Bank fined recently for moving 220 billion USD in suspicious transactions through its Estonian branch. In order to fix the financial crime issues now, that they need 600 more people. Or ING were fined in 2018 for 860 million USD for money laundering cases. And they have created, as a result, 500 more full-time positions to monitor suspicious transactions only. Or similarly, with Commerzbank, fined a couple of months ago in the UK for 37.8 million British pounds. So that's the largest fine in the UK posed by FCA so far. So that's just an indication of where the fines are moving actually. So on this basis, it is clear that the use of the artificial intelligence and machine learning solutions can help financial institutions and banks to remain compliant. However, a better understanding of each other's perspective is the key for building that RegTech banks partnership and achieving outcomes which will be favorable for both RegTechs and the banks. Thank you. There will be questions and answers sessions after this, and feel free to put your questions forward and I will answer them. If there is not enough time for the Q&A, more than happy to take your questions offline. Thank you again, and bye.